Welcome to this week's live ASX strategy session. Great to have you with me. Great to be with you to talk about stocks and markets generally this week. Lots of interesting things going on at the moment with the ASX 200 coming off. We're going to get to that in a moment. First of all, of course, everything today is general commentary only. Doesn't take your personal situation into account. And having gone through and said all of that, I think we'll get straight into the charts. So let's start with the ASX 200 with quite a bit going on there at the moment. So the pullback has really started to take hold this week from where we were this time last week. So the market's currently down around 2.8% from last Friday's close, and a bit of that coming just today. So the market is now back at levels which we last saw in around mid-December. And I think it's fair to say there'll be plenty of people worrying at the moment and wondering whether they should be in cash and getting out of stocks. And with the market coming off an all-time high, the concern many people have, we often see this every time the market comes off an all-time high, pulls back a few percent, people start worrying, is this the start of a big fall? Is there something really nasty on the horizon? And of course, no one knows. Nobody knows how this is all going to play itself out. There's lots of uncertainty, but there always is. This is a stock market. There's always uncertainty, and there's always, we're always wondering where's this going? Where's this going to go next? But we can put some. I think it's important to put some perspective around all this. So let's start by looking at it like this. So from last October, stocks rallied around 18% in around about a 5-month period. And the largest pullback along the way, it was this one back here in January. It was a 4% pullback, and that only lasted all of 2.5 weeks. So it was pretty plain sailing for much of the way. This is one of the smoothest runs we really get as investors. It's they're dreams. They're dream periods when we get them. We do get them. They come every so often. It's not the regular course of trading. And when they do, it's great. You get your profits. You let them run. But then you've got to deal with the pullbacks when they occur. And the fact is that the S&P 200, it's off nearly 5%. This is nearly a 5% pullback now in 3 weeks. And I don't think when we look at it like I just did, put into the perspective of the previous 5 months, being off 5% in 3 weeks, it really shouldn't be a great surprise because markets zig and zag their way higher. And this one really is no different from that respect. I'm continuing to treat the pullback as just that, a pullback within a bullish trend. The evidence for a larger decline, I'm currently not seeing it. It's just not there at the moment. Now that's not to say it won't develop as this price action continues to unfold, but at the moment the underlying trend it remains up. The question for me at this point is what degree of pullback could this be? Is it like the ones that we saw in January and February and March, or is it something larger? And I think it's the latter. I don't think it's just a short-term pullback like we had in December. I think we could actually be in for several months of consolidation. And make sure you look at the US video when I release that on Saturday, which I've actually just filmed before coming live and doing this. And I go through the indices there, which is all an important part of the puzzle as well. And one of the reasons I think that this is probably a larger or a lengthier consolidation is because it's broken this series of rising lows. So that had been in place. We had this series of rising lows in place since the October low, and now that's been broken, and price is now below the 100-day moving average. And so I think that breaks the near-term upward momentum that had been in place. And it's also back below the breakout point from those previous highs. So we just compress this a little bit and we can go back to the previous all-time high or highs, we'll call them, from back in 2022, back in 2021. I was using this as a bit of a breakout point for many months. We continue to watch this level. That was the point to watch for breakout. Market did it was a bit messy in the way it got through there, edged through in February, pulled back, came back through again in March, pulled back, and then it looked like maybe it was going to start to move away with a bit of momentum. But of course, then the market stalled. It's come back. It's now back below that breakout point. So I think there's been I'd describe this as a moderate amount of technical damage to the way this price action is structured. It's not like, I don't think you get a 5% pullback and then quickly reverse and start heading up to all-time highs again. I think there's been enough technical damage to say that this is going to take a bit of time to repair. And what I want to see, I want to see how prices behave around these moving averages, because I think it's okay to have a modest and a relatively brief excursion below the moving averages. So I often say I want to see a market stay above its 50, 100-day moving averages as the moving averages increase. It's when it gets below the moving averages that a bullish trend can come under pressure. So that's where we are now. It is below those averages, but that in itself on one day, it's not the be all of end all, because you can get these relatively short excursions below a 100-day moving average and then find the market stabilize and start to move higher. So it doesn't spend too much time down here, then that's probably okay. What I don't want to see is, I wouldn't want to see price action like, I just sketched something in, price action like this develop, where maybe we get a little bit more downside and then we start seeing a compression band below moving averages, which then start to roll over, because then that's when it opens up the possibility of those larger declines. So that's the price action I'll be looking for probably over the next several weeks. I think it would, if this were a significant top that's going to roll over, I don't think it just goes straight down. That's not usually how these things play out. They usually roll over, you buy the dip, investors come in, start to give it support, but it doesn't really get that kickback higher. The averages start to roll over the top, and then if you get a break below that compression, that's when it can start to unravel. But that's not where we are at the moment. So that's not where we are at the moment. That's what I'd be watching for, because that would be a red flag. But I think, as I say, I think that could take several weeks if that were to happen. So at the moment, my base position is that this is a pullback. This is a pullback within a rising trend. So my focus at the moment remains on staying in stocks which have done well. So I think I've got 7 stocks in my portfolio which are up over 100%. I'm not running out today selling them, saying, hey, look, the market's falling, I better get out, I better lock in my profit. I wouldn't have them in my portfolio had I been thinking that way in the first place, because there have been many times over the last year I would have got nervous and sold them if I was that way inclined. So my focus at the moment, it's holding on to my best stocks, or holding on to all my stocks which are in profit. I don't want to sell a profitable position on what could be a fairly routine pullback. That said, if one of those profitable positions start to give back too much profit and gets to an exit point, or I've got a stock which is in the red already, which just continues down, hits its exit point, I won't hesitate to sell them, to exit them, to kick them out of the portfolio. In fact, I sold one stock this morning. So this isn't just a case of just happily hold and assume everything will be okay, because we never know. We're always managing risk. So I'm shutting down risk where it needs to be shut down. I'm keeping it open where there's a reasonable case for, or a good case for doing so. And as I tell you each week, I'm using those wide trailing stops. And I know the wide trailing stops make people uncomfortable because they think, well, I give back more money. But I believe they're the best way to stay on large trends and manage risk. If we're forever getting bumped out every time the market pulls back, you can't stay on big trends. That's why I think you need to give those stocks plenty of room to move around to see off these what could just be a moderate bout of volatility and consolidation before prices go higher again. We'll know in hindsight how this actually does play out, but I think that's the basis at the moment, that it's a pullback, not a reversal. Now, if you're getting some value from this, please hit that like button. Leave us your comment, just, hey, thanks for the video. Hit the subscribe button just for the YouTube channel. It sends YouTube these messages that people are watching and interested in. YouTube shows other people. That helps me, helps the channel a lot. Now, we're going to move on to the small ordinaries in the sec. I've got the commodities, lots of stuff going on in gold to talk about, a couple of stocks to have a look at. But of course, that wraps up the free section. If you're not a strategy session member, there's a link in the description section below where you can come, you can sign up. It doesn't cost you very much at all. It's such a low cost way to get into this sort of world of trends and breakouts and risk management. It's yeah, look, I think it's one of those things that can really help you no matter how experienced you are, just getting those ideas. It's all about ideas, really, isn't it? It's idea flow. And when you have ideas, you can do things. Okay, so let's move on. Let's move into the, start with the small ordinary.